Okay, welcome everyone to our first panel. We've got some of the most talented VCs in the entire space sitting across from me. I will have them each introduce themselves, starting with Vanessa, and then we'll get kicked off with some spicy questions for the money people.
Hi everyone, my name is Vanessa Grellet. I'm the managing partner of Aglaé Ventures. We started the fund about a year ago. We're a special kind of fund because we only have one LP, which is a famous family office in the luxury world space, and we're deploying in early stage opportunities across protocols, DeFi, and the creator economy.
Hi, it's great to be here. Jalak, Jobanputra. I'm founder of Future Perfect Ventures. It's a fund I launched in 2014 to invest in crypto and blockchain tech. I've been a VC since '99, back at Intel Capital in Silicon Valley, and was on Wall Street before that. We're currently investing out of our third fund, Invest Globally, based out of Miami, and we invest in pre-seed, seed, some Series A. We like to get in as early as possible, and focus throughout the stack.
Hi everyone, I'm Min, and I'm the co-founder and managing partner of Ethereal Ventures. Ethereal is a global investment firm that focuses on early stage crypto investing, and it was set up by the former team of Consensus, so Consensus's investment team, and have the pleasure of co-investing with a lot of these lovely ladies, so looking forward to our discussion.
Hi everyone, my name's Maria. I'm one of the general partners at Electric Capital. Electric is an early stage VC firm. We invest anywhere from generally $1 to $5 million up to, probably our biggest check size would be a $20 million check. We were founded in 2018. We were lucky enough to have some early success, raised $1 billion earlier last year. I think one of the, maybe two things that make us pretty distinctive. One is most people on the team are engineers. Everyone who's an investment partner is an engineer by training. A lot of us still write a lot of code. And also a lot of people at the firm have been former founders as well. Either former founders, our own companies, or were early at companies as well. And so, really excited to be here and excited to meet everyone.
Okay, I'm looking forward to keeping this conversational, but let's set the stage on where crypto is today. The market bottomed in late 22. Since then, Bitcoin's up 80% approximately, ETH is up 50%, but we've all kind of seen the tweets and reports that crypto VC capital formation is down 98%. Funding to new startups seems to be down a similar amount. Where is the disconnect between the price action in the public markets and the private markets? And do we think this is like a .com type bust or just another crypto cycle? And maybe we'll start with you, Maria.
Generally, I think there's a bit of a lag between what happens in the markets and then private capital. I think what we've seen is that VCs have found it harder to raise. Funds are getting smaller, and as a result, the VC funding in the space is also getting smaller. And also, we've seen a lot of VCs pull out of the crypto space, and it's going to, they're not going to exactly pivot out and then pivot back in immediately. And so, I think this is one of those lagging indicators. Of course, the VCs who have been crypto focused, have been in the space for a long time. We never left, right? We're still here. We've still been writing checks. I think. I'm sure all of us have still seen so many amazing founding teams. I think early stage opportunities are still, there's still a lot of them around. I think where it's tougher is probably around anything beyond a Series A. When you're trying to raise a bigger round, that's when a lot of bigger firms that have been bidding up valuations, who have been deploying larger checks, those have kind of gone away in the bear market. And so it is tougher. But I do think, at the seed stage, at the Series A, there's still a lot going on, a lot of activity. I think you mentioned, I don't think crypto's going anywhere. I think this has been actually an amazing market, and having been in crypto, when I joined, it was 2018. It was bleak. Everything was falling beyond 90%. ETH like went under $100. It was a different time. We didn't have stable coins. We had Tether. And like DAI was, kind of this experiment. We didn't have decentralized finance. We didn't have DAOs. We didn't have NFTs. Like we didn't have scaling solutions. All of these things are reality. And so it truly doesn't feel like a bear market. Maybe just only on prices, but in terms of activity, it's amazing right now.
Yeah, I think just to add a little bit to that, with what Maria said, I remember in 2018 and the cycles before that, it wasn't the drawdowns in terms of percentage points were a lot more drastic. Like ETH is nowhere close to $100, and also it wasn't even we weren't really that sure that like everything would survive, right? Like whereas now it seems like crypto is large enough. You just look at the TVL on not just Ethereum L1 but also on L2. Like the number of wallets that that people have on MetaMask. Like it's very clear that crypto is not going away. And I think whether or not it's a .com bust or not, we'll have to see probably 10 years from now. But the world happens in cycles, and there's a lot of mini cycles, and we kind of remember these pointed periods in time. But great companies were built from the debris of the internet .com bust, and also through the GFC in 2008. And not to mention this is also at the back end of one of the largest sort of macro super cycles coming to an end with lots of QE and just rates still remaining very elevated and people not knowing where to put risk risk allocation. So I don't really think it's a crypto per se because we're still on track in terms of all the technology, all the building that needs to happen so that people can actually use it easily, developers can build performant apps on it. But a lot of the negativity and pullback, as Maria said, is because of macro, and is because maybe in the last 2 years things ran up a little bit too quickly, and now we're just readjusting. Nature's just healing a bit.
We can move on.
Okay.
Yeah, we can move
sure,
on.
sounds good. Sounds good. Okay, so. I think the question coming out of this, to extend the .com analogy, is that if you bet against the internet in 2000, you were wrong, even though asset prices have collapsed. And so maybe for the two speakers who haven't spoken, are we still early? Or does the tech actually need more time to mature?
So I think we're still early, and there's a lot of opportunities because all the infrastructure is not, still there. And so I think that's why you have a lot of funds piling into the infrastructure. Now it's very clear that, Ethereum has 98% of the market, and so the scaling solutions have become very dominant in terms of where people's attention is. And, the incentives of VCs and builders sometimes are not totally aligned, and VCs traditionally have made a lot of money on L1s, and we see that some of the L1s have collapsed and have no activity, but have huge marketing budgets. So, it's when you come into the space, it's hard to figure out where to focus because there's a lot coming at you. And I think Electric Capital puts out a great report each year about the developer activity and where actually people are building. So, coming into the space, I would look to that and see where you can, put your time and energy. So we're still early in the space. It doesn't mean that there's not, applications that have received product market fit. In our activity, we see a lot of Web 2.5 projects that are doing really well. We invested in a Web3 CRM recently, which is getting a lot of traction, and the Web 2 world is paying attention and wants to use the tools of Web3, wants to use the engagement and the communities of Web3, and basically also all the freedom that Web3 offers. And that's kind of where the world is going and where people want to be.
Yeah, I agree with what a lot of Vanessa said. I do think we're very early still. It's interesting because those of us that have been in the space for a while, we've seen so many cycles. We're starting to see, serial entrepreneurs in the space, and With tech in general, that is a key to maturation when you start to see entrepreneurs on their third, fourth companies, and we're starting to see that within crypto, which is very exciting. And I think unless you follow this space, there's still a lot of our LPs are outside of the space where probably the only fund most of them have invested in the space. So their question is always, is crypto dead? And I think we're so far from that. And we also invest in a lot of the hybrid infrastructure thesis. I put together the thesis in 2013 after going to a Bitcoin conference. So Ethereum hadn't launched. We were really, really early. And the reason I was really excited about it, Mt. Gox happened, and yet there are so many developers still passionate about what decentralization meant. And having been born in Kenya, spent a lot of time in emerging markets, and seeing how few people really have sovereignty over their wealth, over especially women, in terms of their property. I thought this technology was really interesting. So we do a lot of hybrid investing too. Yes, as much as I believe in a decentralized future, I also think we need better user interfaces. We need better tools. The average person does not have the time to sit there and download lots of software, worry about whether they're going to lose their assets by a hack. And it's not that different from the early internet days when I was a banker when the Netscape IPO happened. And I remember talking to one of my managing directors, and he said, "Why would I use email when I can just pick up the phone? It takes so much longer to send an email." And or nobody's ever going to watch a video over broadband because it's just too slow and clunky. And so I think we're still in the clunky days of crypto, but I do think we're moving very quickly, and just the amount of entrepreneurial activity and developer activity in the space is very exciting to see.
So I think that's a good segue. I think VCs have been accused of over-investing in infrastructure. Do you think that's true? Are we ready for applications? Or how would you respond to that claim?
So it really depends on what the business model and how the VCs are thinking about it, because a lot of the applications do not have tokens, and so VCs are piling up into protocols which have tokens and very early liquidity. And if you go into applications that don't have these incentives and this community aspect, it's a different return profile. So I think we've been used also to having very quick liquidity and do a lot of things that traditional investors don't do, whether it's staking or managing nodes or being involved in the governance as VCs. And so I see applications at this stage still having a different return profile, and that's why you also see a lot of VCs piling up into infrastructure. One, because it's needed, but it's also the way that Web3 VCs sort of make money and are incentivized.
Agreed. We've maintained being a 10-year fund, mostly venture capital. We do invest in some protocols that we think are essential to the future of around different infrastructure stacks that applications can be built on. But there is we're also very careful who we co-invest with, especially when it comes to tokens and infrastructure, because it's similar to a company going public too soon, right? You don't want all of a sudden to have shareholders that have different incentives that maybe just want to flip a token. And then, we remember the early days in 2017 with the ICO boom. There weren't any lockups back then, and we saw what happened when there are no lockups. And so I think there has to be a balance. I think early liquidity is great. I'm very excited about having interim liquidity within 10 years, which is traditionally venture. But I also think making sure that entrepreneurs get the right investors in, depending on what their objectives are, is absolutely key.
Yeah, I think, it's not necessarily a straightforward question because I think there's some merit to that. For example, for our firm, we would love to see more application developers attempting to build apps. We would love to hear their feedback about using the tooling, what else they would like to see. I think we've been funding a lot of R&D and a lot of infrastructure since 2018, and it's so cool to actually see it come in the wild. Being a judge of a few ETH Global hackathons this year, it's the first time that we've seen all these crazy ZK submissions that teams like Aztec and Elio have been working on for a while. So there's basically this symbiotic relationship between infrastructure and applications where you do need both, because you have to try to build the application back solve as to what the infrastructure needs are, and fill in the gaps after that. I don't think there's one or the other. It's just sort of a matter of where we are in the cycle, where we are in an adoption curve. I think at the moment, because there is a lot of excitement with a lot of L2s, so lots of the investment have focused on things around roll-ups and MEV and L2s. But we do feel fairly confident that getting more developers to actually play on the application side, we're going to see a lot more interesting opportunities too.
Maria, did you want to add to that?
Sure. I mean, I'm personally very excited about applications. I think, and I have invested in applications. The ones that I've seen that are truly interesting look really weird, and I think they're hard to come by. I think a lot of people build applications that's hey, let's take a Web 2 concept, let's take LinkedIn but make it crypto, right? Or let's take a known entity and add tokens, or add some crypto element to it. And I just feel that's fundamentally not how it's going to happen. And so, the ones that I have invested in that I'm super excited by, for example, I love what's happening in Nouns now. I'm very obsessed with that ecosystem. I spend a lot of time there. And one of the platforms I invested in is Atrium, who's creating the Nouns movie right now. And Atrium is really interesting because they have a platform of these animators who's ex-Marvel, ex-Pixar. One of the animators who's working on the Nouns movie is actually one of the animators from Up, which is that I'm sure everyone cried in the first 10 minutes. And so, and what's really exciting about that application is these artists aren't, sitting around being man, I'm really excited about this decentralized future, or oh, privacy, or financial transparency. They're there because they're actually just earning more money. And it's very, very real. It's very tangible. For a lot of these artists, they were doing private commissions before, literally just, DMing people. But because now on the platform, each commission is an NFT that people can bid on through an auction system, there's transparency and there's an ability to reach a true, a real market price for what their commissions are. And so some of these artists are, making 8 times more than what they were before. And so that's real, right? This is not some guy who's hey, I care about Ethereum. This is some guy who's wow, I'm literally making 8 times more than I was before. And I think those types of applications are really interesting. It brings real value, and it doesn't necessarily look like something that's existed before. Waterfall, or Curta is another one. It's an application where it's a capture the flag protocol, where basically you can have an NFT to create a Solidity puzzle, and then people vie to solve the puzzle, and if you solve it at different times, you get different tiers of NFTs. And I think it's a really interesting way of actually building out a talent marketplace, because they've effectively aggregated all the best Solidity developers and engineers around, but it doesn't look anything like LinkedIn, And so I think those types of, we're still probably exploring what it means to have a crypto native application, and I think it's still early days for that.
So I think to go back to the .com analogy, Web 1.0 was actually super skeuomorphic, right? It was just put yellow pages, but just on the internet. Let's just put the pet shop, but just on the internet. And so now that we've kind of gone through, maybe to analogize what looks to be our .com, if you had bet against the internet, you would have been wrong. The internet was essential infrastructure, not just for businesses, but for everyday people. Is that what crypto is going to be? do we need mass adoption for crypto to succeed? And is that possible if the things just are weirder?
Yeah, I think we need adoption. I think we need mainstream adoption. I feel like I wouldn't be here if I didn't truly believe like everything is going to be running on crypto rails, right? Like NFTs are going to be everywhere. Absolutely, almost like all your financial transactions are going to touch crypto in some way. And I think if I didn't believe that was going to happen, it would just feel like this is a waste of time. Like if this is just for a small percentage of people, like that's just not the future that I see for this technology.
Yeah.
Yeah.
Okay. Yeah, I agree. I mean, with the internet, you know, every company had a digital division, an internet arm, you know, which was staffed by 3 or 4 people. You know, all the media companies had that. You're laughing. You can, and so we're going to see similar, you know, and that's where, you know, I mentioned how we're very interested in hybrid applications also, and where. You know, we can start to see Web 1, Web 2 entrepreneur. I mean, I know entrepreneurs coming out of retirement because they're so excited about the new kind of business models or what's now possible, you know, using some of this crypto and blockchain tech. So I do think it's going to be incorporated into our everyday lives in a more seamless way. Most people won't even know that they're interacting with it. I mean, we can have real-time payments. There's just, you know, better creator tools, just a reduction of intermediaries, which is what this is all about. You know, we no longer need the intermediaries that we had in the 20th century. So Again, our thesis 2014 was every single sector is going to be disrupted by blockchain tech, just like the internet was. So media, healthcare, it started off with financial services. And then there will be new areas and new business models that are completely crypto native, but we'll see a lot of kind of hybrid technology out there.
I want to caveat my previous cynic views on the VC returns and stress how important the entire infrastructure is for the world. We've seen with recent developments in AI and acceleration of other technologies how important privacy, how important a secure platform is. And mass adoption will be, as you said, Maria, just the underlying infrastructure and the rails for everyone. I don't think people realize how much banks and institutions are invested in the space and understand in the financial services how important this is. Right now, they might not all be trading on Aave, but they get it. They see that it's much more efficient. They see that it's the future. It's going to take time for this mass adoption, at least on the finance side, but it's coming. You have EDX, who is trading all the markets with Citadel. Like all the institutions are ready. The regulation, of course, is lagging, but it's coming. So that's one part. Then we have the NFTs. We have everything that is, you know, related to ownership and privacy is going to become prevalent. I know we've been saying this for 10 years, like we all care about privacy and, you know, the Web 2 world doesn't care. But when AI comes in, it's a real threat to our society, basically. And so I see crypto not only as a financial opportunity, of course, as an investor, but really as a societal discussion and a real issue for our society.
Okay, so a couple of things that we've heard. It sounds like we're maybe still early. We're still building out the infrastructure. We need mass adoption, and we've been through this crazy cycle of where everyone was aware of crypto, and now we're kind of pulling out of the bear. What do you need to see as investors in 2023 that maybe you could have overlooked in 2021 when you were writing a check?
So the first thing is, you know, I truly believe that great companies are built in both cycles. Like, you know, it can be built in bull runs, like bear markets, what have you. It's just, I think some of the indicators of success, like to capital allocators, might be different. So everything trickles down from the top the same way, like, you know, Sometimes our portfolio companies have to give us reporting. We have to give our investors reporting. And a lot of LPs are now asking the questions of like, where's adoption, where's the traction, where's the revenue? And that then trickles back down to like, questions we have to ask for our portfolio companies. Whereas in the bull markets, like there's a lot of exuberance and people are just excited to see the next shiny new toy, right? Like, are you investing in this? How about that? So I think, at the moment, we're really focused with our portfolio companies on extending runway, reducing burn, trying to get to like product traction as quickly as possible. I do think, there's like some investors really focus on revenue. To me, it really depends on the project and what they're trying to achieve, especially for a lot of like, crypto projects. The monetization is very different from, say, traditional SaaS or like transactions. And we want to encourage founders to be creative about that. But certainly, I think, having an idea on like, more of the businessy side of things, like the go-to-markets, like what problems are you really trying to solve? Like, how will you actually add value to like, consumers such that they at some point will pay for your product in one way or the other? These are all things that, I think are top of mind for a lot of investors that I'm talking to too.
Agree with Min. No, I think the issue that we saw the bull market was, the craziness of the process, the investment process. You had to sign the term sheet immediately, or else, someone else was going to take the deal. We've seen that type of behavior sort of disappear, and so it's really nice and refreshing to have time to actually do due diligence on the teams. I think we're still looking for the same thing, just great teams that have a vision, that have ability to pivot, that are able to listen to feedback, and are obsessed by what they're doing.
Cool. I think we're at time, so thank you for all of your perspectives and for joining the SheFi Summit.